And welcome back to Freight Waves Now on this Thursday morning. We're going to welcome our last live guest of the day. We've got Elaine Levin, who is president over at Powerhouse. Elaine, thank you for joining us on Freight Waves Now.
I don't know if she's got herself muted or...
Elaine, we got you?
Can you hear me now?
Yes, we're good. We got you now.
Okay, great. Thank you for having me.
Let's talk a little bit about what Powerhouse does before we get into what we're chatting about today with the fuel markets. Tell us just a little bit of background.
We help companies control profit margins and grow their business through the use of financial instruments or hedging. So for the listeners here at Freight Waves, many people are now concerned about the fuel surcharges going up, price of diesel going up. We get involved with helping companies offset those higher costs in their business.
Right. So, I mean, jet fuel was one of the big things back in the day in the airlines. I believe it was Southwestern that really proved the ability to use hedging of fuel quite nicely. In this market right now, what are you seeing in these times of crazy fuel prices, diesel prices?
Well, we have a diesel problem. And it is showing itself in price. It's showing itself in availability of product up the East Coast, actually on all of the coast. And it all stems, of course, from the war in Ukraine. But we get one story after the other, whether it's the power being or the gas being shut off to Poland and Bulgaria. We just heard Indonesia will be banning the exports of palm oil, which of course is important for biofuel production. And we started this whole conflict with very low inventory. So there's just no easy way to make it up. As Europe looks to get off of Russian natural gas, we continue to see them bidding for the world's diesel. And it's causing issues throughout the whole country.
Elaine, our colleague John Kingston, who has been covering the oil and gas markets for basically the entirety of his career, just put out an article today talking about the now widening spread between diesel prices and retail crude and gasoline prices. And in his assumption or in his interpretation of the prices right now, he's seeing about $1.20 different spread between the retail price of gasoline and the retail price of diesel. Can you talk about what that means for folks who maybe are looking at starting to hedge some of their fuel futures, and why it would be a good time now to get in before that spread continues to grow?
Well, the thing is, the fact that diesel is taking the leadership in the market just tells you how tight things are. We got an inventory report the other day that shows us, it was Wednesday of this week, that shows us getting dangerously close to 100 million barrels in inventory, which is minimum operating levels. In other words, we're drawing national diesel levels down to dangerous levels, diesel inventories. So what this means is price will adjust, price will ration, and anyone who's paying a fuel surcharge, we can't go back in time, but we can, through hedging, keep things from getting worse. And so I always say, if you want to be successful at hedging, the best hedgers like Southwest do this regularly and routinely. They don't wait for a shock to happen before they get involved in protecting their diesel prices. So is it too late given what's going on? Probably not. But just know that success really depends on doing this on a regular basis.
Yeah, it really does, and it also depends on your understanding of the fundamentals of it. Elaine, can you quickly, for our audience out there, maybe don't understand that this is a zero-sum game, really, right? Can you explain the concept in a very simple terms? Because I can explain it in a very, very difficult way and a very, very simple way, but I'd like for you to explain it to our audience, if you will.
Well, I think if you're talking about the act of hedging itself, think of it like in buying insurance. Everybody who's watching this has insurance on their trucks, and they have insurance in case they get into an accident. Well, think of higher fuel costs as your accident. What we're doing in the financial markets are buying instruments that have a payoff if diesel prices go higher, which can be used to offset the higher cost of fuel. If diesel prices fall, well, you bought some insurance that you didn't need. I think people are thrilled when their trucks don't crash and they don't use their insurance.
Right. Yeah, it's a zero sum game. So you're avoiding the crash, but you're also lose out on those windfalls. But I mean, for your stakeholders, okay, go ahead.
No, because if you use an option,
okay.
What you're talking about is a futures contract.
Oh, okay,
what I would recommend for the
you're
average person here is a call option,
gotcha.
which basically would allow them to participate in the windfall if prices do collapse.
Excellent. Thank you for that clarification.
And so, Elaine, in the market that we're in right now, you've got folks that are kind of scrambling all over the place, right? You're trying to offset these falling rates. You're trying to offset these higher fuel costs. And as I mentioned earlier, you've got these smaller guys, these smaller carriers that are really suffering the most. They're taking the first hit. They're the first on the line to get cut. Can you talk about how kind of hedging and futures play into either the success or the failure of smaller groups when it comes to market turns like this, if it plays any role at all?
Well, it's one of the things where it helps to have the gallons to make it viable. It's one of the great things about being a big shipper is that you're big. It gives you lots of economies of scales. So I realize that this is more difficult on some of the smaller businesses that may be watching. But there are hedging vehicles that we can look at that can hedge down to some very small gallons, which in our world are hundreds of gallons per month as opposed to tens of thousands per month.
Oh, that's excellent. So what you're seeing in the market right now, how do you feel the spread and the current situation is going to affect the freight markets going across into the summer and into the fall?
Well, we see the EIA's retail prices jump up at a pretty fast rate. And given what's happened in the futures markets today, I mean, we have been coming up 20 cents a day. We're not that far from $5 a gallon that's on the futures market. So my guess is you will continue to see the EIA price that everybody's surcharges peg off of continue to rise at a quick pace. And it will work its way through the whole system. Ultimately, what will happen is it will impact demand, and we may be starting to see the beginning of that right now. But we've had a great economy that has kept demand for freight so strong, and this is what finally might cool things off.
So, Elaine, if you're talking to a client right now and they're kind of coming to you looking for advice and saying, how can I offset my costs? How can I better prepare for the next few quarters of uncertainty that are coming? What would be your advice to get them either into starting to look at their fuel futures, or maybe just kind of advice in general for how to behave when it comes to budgeting their transportation spend on fuel for the next few months?
Sure. I mean, I think that you want to understand the instruments that you're using. You want to deploy them correctly. I mean, just our discussion about a futures versus an option. Also, the options that we have access to. It's one of the things about working with a good broker. I always laugh and say there's only one in America. But it's true that you want to work with somebody who's got good connections, able to get you good markets depending on the types of gallons that you need to hedge. Beyond that, there's education. We do hedging classes. You can find it on our website. We have another one coming up soon. And I think if you think about it, labor and fuel are the two biggest costs. And there is something you can do about your fuel budget. Hope and pray is not a strategy. When you hedge, you at least know what your worst case budget is.
Absolutely. Couldn't have said it better myself. Thank you so much, Elaine. Where do people go to sign up for these classes and learn more?
If you go to our website, which is Powerhouse TL, that's Powerhouse, T as in Tom, L as in Larry.com, you'll find information on our next hedging class there.
Excellent stuff. Thank you so much. You have a wonderful rest of your day.
Okay, thanks for having me.